We have a special treat today. I've really been looking forward to meeting and having a conversation with Tommy Thornton, who is the founder and operates hedge fund telemetry. Tommy also runs a long short hedge fund. Tommy, welcome to TradeGATEHub. I've been looking forward to it since we booked it a few months ago. So, welcome.
Yeah, thanks, Dale. I've been a fan of yours for a while. Love watching all your videos and
Oh, thank you,
definitely
man.
subscribe to your channel. It's really good. You have great guests and
Yeah.
really informative. So
Well,
thanks for having me.
yeah, you fit right into that catalog, Tommy. So, I'd like to start off first time I interview somebody. Listeners are always very interested because it's a long, twisted, broken road at times in this industry. You have failures at times that you have to embrace. You have to start over. You have to live through adversity. So, why don't I take you back in time? Were you interested in the financial markets when you were at the university, wherever you went?
I actually, yes, I was. I started. I'm 59 and I been in the markets for decades now. When I was in college, I started trading stocks,
Okay.
and that was pre-internet, and I did okay doing that. I got into the business in the early 90s, right when the markets were starting to get going on the upside with
Okay.
technology and the
Yeah.
internet, and I worked within a group at one of the large brokerages, handling high net worth and small institutional clients. Did a lot of trading for them, and had my own clients. And then I ended up in 2000 leaving and joining a hedge fund to be the head trader for $1 billion asset uh, hedge fund. And it was a long short equity hedge fund. And then,
Well, let me ask you,
as,
let me just stop you there because I
sure.
mean, back then that was a big number in hedge funds. Okay. So, was there an adjustment period? Because most likely you weren't handling that kind of size going into it. And, same thing happens with us when we have small accounts and all of a sudden we have big accounts. There has to be some type of paradigm shift on how you begin to handle larger amounts of capital. Was there an adjustment period for you with that?
Well, it took longer to get in and out of positions, obviously, and so yeah, it was a bit of a quick uh, change for us, for myself and how I handled things. But as it turned out, I left that fund. I mean, the firm had 15 billion under management, and the hedge fund was a billion. But that was like at the peak of the tech bubble bursting, and the fund did pretty well. I launched my own fund with another partner from the previous firm. We ran that for a little over a year, and then I was recruited to come to Connecticut to work for a larger hedge fund, which I worked at till 2011. I was the senior trader. I did all the technical work. I looked at market sentiment for the firm. I also, towards the end, I was I was the only one that had an outside or carve out portfolio for about $100 million that I ran.
Okay.
And then things changed. I'm not going to get into the gory details of how sometimes hedge funds die, but it was a pretty sudden and awful death, which that's over drinks one time, Dale. We can
Okay,
go through
buddy.
that. But
Oh,
as
all
it
right.
turned out, I ran a family office for the founder of that hedge fund and then raised some money for Alibaba pre-IPO, which I sort of lucked into.
Oh,
And then
you were even a venture capitalist for a while.
you know what, at certain times in your career, you kind of figure out you got to do a lot of different things.
Reinvent
And then
yourself.
I started hedge fund telemetry, which is basically a website and newsletter. I put out two or three, sometimes more notes a day, run a trade ideas portfolio. But I look at macro markets from equities, bonds, currencies, and commodities. I also look at Bitcoin. I don't trade Bitcoin, but I do have occasionally really pretty good analysis of which way it's going to go.
Okay.
I probably should trade it, but I've always said if I start buying it, I'm top ticking it right there. But
Okay.
I like writing, and I've built a nice business with thousands of subscribers that we now have a Slack channel, so everybody's commenting all day and all night on different things, and it's been really nice. I have a lot of institutional accounts as well, so I have a nice mix between real smart private investors and real smart institutional investors.
Okay, that in the options market, they call that the difference between wise guy trades and option sweeps. I want to ask you, Tommy, are you self-taught or did you have any mentors or people that greatly influenced and taught you things that changed your way of looking at markets and how you trade today?
Right. Well, I think that one of the things that I like to tell people that subscribe to my service is that everyone has their own process, and that process develops over years of trial and error and seeing what works and taking a little of someone else's process and integrating it into your own. And everyone has a different risk tolerance, a time frame, and there's some people that are just phenomenal day traders. I'm not that good at day trading. On occasion I'll do that in my fund, but for the most part, I've just built up a process over the decades, and some of the people that I think have been really instrumental. I learned a lot from Alan Shaw, Louise Yamada early on, um, legends in technical analysis. I learned point figure charting, which I still look at. I think it's pretty insightful, especially at peaks and valleys in the markets. You really can
That's what
easily
floor
spot.
traders used on the floor. When I
Yeah,
was there, X's and O's, and they'd get a reversal and they'd run into the pit. This is, in the old days at the Merc where you had runners and clerks and open outcry, and you could hear roars when they went through stops. But yeah, point and figure, I still know some guys. They give you great objectives, don't they?
yeah,
Um,
they really do, and I like looking at. I mean, I like looking at markets historically, and I look at internals. I'm probably one of the more prominent people that uses the mark indicators out there.
okay, is
I've
that your
used the mark.
edge?
What's that?
What's your edge?
What's my edge? I combine a lot of different things and look for inflection points.
Okay,
I, I, I did pass level one CFA and I never went back because
yeah,
was running back to a hedge fund and I had no time to do the rest. But I have a little bit of a closet value slant to things. I like to look
okay.
at valuations and the fundamentals and debt structures and cash flows and everything, those things. But I really think that combining the DeMark analysis on different time frames, looking at market sentiment. One thing that was really pretty cool at my old fund, we had $5 billion under management, and I was sort of the guy that was to you know go hang out with all the market sentiment people, all the different polling people, and Ned Davis, that
Yes.
his
Know
group.
him.
So I
Yeah.
was a contact person with them. I learned a lot about how they look at market sentiment, and sentiment really is not necessarily a trigger if it gets overbought or
No.
oversold. It really is more of a condition. So I combine that with looking at DeMark analysis, which I believe work well
You talk
as a
VWAP a
trigger.
lot. You talk VWAPs a lot
Yeah,
in your stream.
yeah,
So
I will say my old partner David Gannick, who ran Level Global, our old firm, was obsessed with VWAP levels, and it's just carried on. And volume weighted average price is really pretty useful. I think more useful in the short term because after a longer period of time, it just sort of morphs into the moving average from that particular time. So I'll look at moving averages intraday. And for example, if we're looking at a market and let's say it's a strong market and it's ETFs and markets are trading, indexes are trading above their VWAP levels, the buyers are in command. But there's a lot of times where you'll get a move and the market could be green, but things are trading below their VWAP, which possibly is a good sign for underlying selling that could develop into something a little bit more severe. So
Okay.
I look at
Interesting.
that and it's pretty helpful for the intraday type of timing.
Okay. Well, you know what? Let's get to the meat. So here
Okay.
we are, Tommy, 2025. We've had 3 prolific years of risk on where people have been able to just buy a spider, go to the golf course for 3 years,
Yeah.
and get rich. My opinion with this new regime and a lot of changes coming down the road that those days are over and that there's going to have to be more tactical and better risk management and the fact that the old darlings may not be the ones that are really going to be the stars of the future. It may not be Nvidia. Obviously, maybe it's not Apple anymore. So flow out the Mag 7. So what do you see as the greatest risk going into 2025 for the equity market that's on the verge today, S&Ps of making new all-time highs?
Well, listen, I think that you have Trump 2.0 starting, and the setup is a lot different versus Trump 1.0. And I'll disclaim that I'm a Republican. I did not vote for Trump. I didn't vote for Biden. I have a problem with both parties, mostly because I think there's just out of control spending and there's a serious amount of grift that goes on with both parties. So I can crap on both parties if you don't mind. But
Okay.
the way I see it right now is that we have a lot of excitement, a lot more acceptance of Trump's policies, and it's not to say that I don't necessarily disagree with some of the policies. I'm in favor of a lot of them. But I
Tariffs?
think that what's that?
Tariffs? Tariffs?
I'm not a big fan of tariffs, and for obvious reasons.
Yeah,
And
like Smoot Hawley?
yeah, well, listen, I think that a lot of people have tried to debate whether they'll be inflationary or how it will affect the customer or
Hmm.
consumer, and more so how it's going to affect a lot of companies. And it's still one of those things where Trump will say, well, I'm going to do less here, more there, here,
Hmm.
there. And a lot of people will say that it's a negotiating tactic, and possibly it is, but it's certainly not going to fix the national debt, or I really don't see the deficit coming down dramatically from these levels. And those are the risks I see. I think there's a lot of exuberance in the market. As Jamie Dimon said today, he thinks the markets are kind of extended. I think that's the word he used.
Yeah,
But I don't see markets at necessarily valuations that make sense. A lot of the move has been um, multiple expansion, and I think a lot of it's going to really depend um, in the next few months. And look, we have it's day two of Trump 2.0, so you have all these new things, and Stargate, the AI initiative that there's just people need to remember that during Trump 2, 1.0, there were a lot of proclamations that came out and a lot of tweets and things that roiled markets and things went up and down, fairly dramatically. I don't really know if all these things are going to come to fruition. He
yeah.
mentioned 500 million or $1 billion for this initiative. Elon Musk tweeted out that they don't have that much, and I don't think they do. But it sounds nice. And
Yeah,
Trump
there's
said
a
that they, yeah,
difference between what you say on the campaign trail and what you can legislate.
yeah.
So, yeah,
I listen. I'm an American. I'm proud to be an
rooting for him.
American. I think we just have a lot of structural issues, and It'll be interesting to see how Scott Bessent does, who I have a lot of respect for Scott. Met him over the years, and I think he's fantastic for the job. But it's a matter of Treasury refunding that's going to get tough in this year with higher rates. And I think rates are going to be a tough thing. Now, are you showing your
I
Apple
was,
screen right here?
yeah, well, I was going to ask you if you thought that this could be the canary in the coal mine, that we
Yeah.
went from being the strongest stock, that, momentum was really strong on the daily. On the 4 hour it was, and we had lots of divergences, but I certainly didn't think that we'd be at 220 from 260 this quickly.
Well, I mean, this is a good example of multiple expansion. When I mean, I'm looking at my screens, and I can do a screen share.
Okay, let
Um,
me stop and let's talk about your stuff. Our audience sees enough of my squiggly lines.
well, this is one that I've been short, and I had a let me just pull my screen up here. Let's see, which one do I want? My screens are a little bit, it's going to be a little busy, so pardon the
That's okay. Here we go.
sort of didn't plan it, but it's good. Okay, if you're looking at this box here, right here, can you see that one?
Yeah.
So this is the daily on Apple and DeMarks. I'm not going to get into the specifics of everything that's happening within DeMarks and why, you know, how they all work because we'd be here for days, and it's taken me 25 years of using it to, sometimes have to refer back to a book on how they work. But I can just blow this up here. Okay, so. This is the daily on Apple, and when you get 13s and 9s, those are the inflection point numbers that we watch. Tom DeMark developed these really by without computers back in the 70s on large reams of paper, and he tells these stories of him when he created those. The fire department came and said, you got to clear out your garage with all the paper. It's a fire hazard.
Yes.
So that's Tom. But one of the things I'm looking at, you have purple and red. So the purple are combos, the red are sequentials. They work fairly similar. There's some parameter differences. But you had the 13s up here, and this was upside wave 5. So you had this was wave 2 down here, 3, pull back to 4 and 5. So 5
Did
waves.
did your fund short it?
I am short, and we also when we had these 13s hit, I said I think we should do a put spread, and so we did. I recommended a 245 220 put spread, and when it started moving down here into the 230s, I said take it off. I mean,
Nice
it's so
trade.
hard to get anything right on the short side that I was
Yeah.
happy to take some off. But
Yeah.
one of the things that's sort of concerning as well, and hold
You
on, let
may
me.
get another chance to sell it at 240. What do you think? Could it rally from here?
It's possible.
Yeah.
Hold on,
Okay.
let me just pull this guy in here. So one of the things that I look at, and you can go back and you can say, well, how did these things work at these particular times? And this is the weekly 13s. And as you go back in time, you can see that when you get a 13, it's not necessarily you're going to get 1987 and it's going to be the biggest drop ever, but it's telling you that the buyers are exhausted here and that it should pull back. So, I mean, this goes back to COVID
Yeah.
times, and you had weekly 13s up here. And I had usual people that said, no, they don't work. And then I had the usual people that say they don't work here. You had these pullbacks,
Yeah.
and sometimes they don't work. And you get a pullback generally after a 13. You should see some sort of um, a stalling period or uh, a reversal of some sort of after 5 to 10 bars on a weekly, and on the daily, it's about 10 bars. So,
Where are we
so
at
we
on
had
this? Go ahead.
so
Yeah,
the thing
that's
that's
history.
interesting here is you had combo and sequential 13s here, and this is the weekly. And if I even hold on, let me just scooch my thing down. I can do a let's look at a monthly, and everybody will say, "Oh, well, you could you they don't work." And it's also times where since I've used the DeMark indicators for so long, I know when I need to be more aggressive on my analysis. And when I see the indicators working like this, I mean, this is the monthly. You had a combo here, and from this level here,
Yeah, which
237, it went to under
that was the
200.
August sell-off. Yeah,
Yeah. And now
yeah,
you had a sequential this month, and you see this big reversal down.
mm,
So I think that's important. It worked pretty well here. And these are months. So, this is basically a quarter where it was down. This didn't really work that well. It sort of stalled it out for a month, and then it resumed. Here it was down for 5 months, or 6 months. This was 4 months down. And it's people can say, well, if I had just held on to this, you can look back and say, yeah, I can go back and say, oh, I wish I held on to it, but let's try and do something here where I can zoom. And if I go, hold on, zoom. These look a little bit more important when you go back and you say, well, it was $24 and it went down to 15. And so you look at a lot of different things in here, and sometimes they don't work, and you have these purple lines that tell you it's not working. And monthlies are not what I trade off of. I usually trade more off of the daily stuff. But
yeah.
that's an important signal here. And I think that, again, multiple expansions, trading at 35 times earnings. Historically, 30 times is very extended for Apple. You're getting no growth in Apple, and I don't think their iPhones are selling that well,
No,
especially in China.
yeah,
So let me just go
yeah.
back here to my
So
weekly.
I think it's a great tutorial you just gave us on DeMark. So with the markets pushing new highs, are we near a 13 or any extreme readings on DeMark now?
Okay, so let me do this. Let me hold on. Okay, so
And
here's my
and is
main.
Apple just the first tree to fall silently in the forest?
It's possible. And why don't I do this? Why don't I get the
And then I
SPX?
want to go to yields because of your narrative for higher rates, because I have a question about TLT, and I know we're bouncing now, but the level that we held in my work is so significant that if we take out 85 in TLT, we could have a cave in.
So I'll be the first to admit that this has been maybe the 2024 maybe was the hardest year I've ever been in the market. And it was, really difficult if you weren't overweight the main names. And when you have Nvidia doing a quarter of the work on the upside, and then the top 10 basically doing about 60% of the upside in the S&P, it's hard. You have really strong narratives in those names, and I'm not um, really going into, I have to, press shorts dramatically. Now, the difference today here, I'll scrunch this here. From these 13s here, at the highs in early December, you've had a 4% move down, 3.5 up, 4.5 down. And now let me just adjust this.
Six
Hold
up.
on. Yep. So you've had a 5.5% move. So you've had this real extreme volatility, and I think that it's those are the types of markets that concern me when you have that happening. And I'll just do.
It reminds me, Tom, of that expression, and I think that happened after the Fed meeting, that markets top with violence, and what you're just showing here is pretty violent action happening every other day having these kind of swings or every other week. They top in violence, and as Louise Yamada would say, they bottom in silence, right? The
Yeah,
longer
it's
longer the
possible.
base. Yeah,
Let me just hit reset here, and I'm gonna get into QQQ, or I think NDX. Here, so here's NDX.
it
I
still
mean,
has legs, right?
yeah, I mean it's still below its peak. You had a 13 here with resulting, I don't know, 5% downside move after
Yeah.
that. And now you've had this move back up. These swings happened also in 2000. They were a bit more pronounced, but it was April of 2000 that we started to see these big wide swings. So my
And
view
then what?
right now,
And then when was the final high? It started in April. How long did we go with this type of activity before the high was set? Do you remember?
uh, I think we started to, what happened is we started to diverge and saw fewer stocks making new highs, and it got more narrow.
Okay.
And then it really more or less everything peaked in that first, that towards the end of Q3. And then Q4 you had the election and all, everything just sort of, puked.
Hmm.
So this is where I'm looking at right here, and this is the weekly on the NDX, and
Right.
so we have another 13 up here, still below it. We had a fairly decent reversal. It's back up a bit. 13's here. 13's were buy signals down here, so it's not always a sell signal.
Yeah,
And some of
that's a
them,
great point.
yes, I mean, and going back in certain times, I mean, 2022 was a great year for me because I could buy and sell a lot of these into a downward five move. And I covered a lot, at the end of December. And, sadly, I just didn't, I bought Nvidia, and I thought I was a hero. I had a gain of, I think, like 15% off the lows, and I was like, yeah, that's nice.
Yeah.
But it's just gotten a little ahead of itself. A lot of things. So let me show you the bonds. Hold on, let me back this down a little. So if we go and we look at bonds, with all my screens going, so and actually I'm missing a screen on top. I broke
Okay.
a screen while trying to uh, clean it.
Okay.
That was lovely.
Okay. So
So hold on.
you don't have the
Here,
bonds.
I'm getting let me put the 10-year up here. And so here comes the 10-year.
Okay. So 5%'s a layup, Tom, and how much on the 10 year?
So here's let me make this a little larger. So the thing that was sort of interesting is I started getting a lot of signals in September when the Fed was cutting, or
Yeah.
planning on cutting, and the market was pricing that in. And all of a sudden it started to move higher, and so my view was that the Fed was not really, they didn't really have it together. They were doing something that the bond vigilantes were saying, no, sorry, you have a high deficits, you have
Yeah.
huge debt issuance,
Hmm.
and you still have inflation. And I still think inflation is out there. There's a
Yeah.
bugaboo out there that
Yeah.
if we
You
continue
talk.
higher in the equity market, we'll probably still have inflation. So
Yeah.
here's my view.
You
We have
talk about
these.
jet fuel going up quite a bit in the last month or so.
Yeah,
And you even said Bernstein, after being bearish nat gas, I think they're a little late to the party, but they're
yeah.
now positive nat
Yeah,
gas.
so basically, I still think rates can go higher. They're trying to, lift a little today. If we do get above that 480 level on the 10-year, then 5% is doable. So this is jet fuel, and not many people look at this. I do, and it's just little dots, but it's probably better to go and look at it through here. So I look at jet fuel because I'm short
Air,
jets ETF, and airlines tend to do really well when you have lower jet fuel pricing.
Yeah.
And since December, it's up about 22% off the lows. And I think that's probably a headwind since 30% of their input costs are jet fuel. Of course, they hedge it, but that isn't always a perfect hedge. Um,
Okay.
let me show Bitcoin. And again, I don't trade Bitcoin. I don't really care if you're a Bitcoin believer, hater. I don't really care. I look at it from this point of view. And the
Did
next
you
thing I
buy,
want to do,
Tom, what's more important than Bitcoin is how many fart coins did you buy, Tommy?
yeah, well, I mean that's what David Einhorn mentioned in his shareholder letter yesterday that I read. We're now in the fart coin stage of the market cycle, and I thought that was pretty funny. When you have a lot of people that just believe in stuff that
Yeah.
doesn't necessarily um,
It's like
exist.
tulips.
Well,
It's worse
you
than
know, tulips
tulips.
you could buy, but
Yeah,
you know,
you could. Yeah,
you
you're
just
right.
don't, I mean, you're buying something that has zero intrinsic value and people are believing it and they have joined this narrative that that Trump is this super pro crypto and you know even if some of my most MAGA-ish friends even said that they thought that his um, shilling of the meme coin was just beyond the pale. But I'm not going to get into that.
Yeah,
It's okay by me. So here's Bitcoin. And I'll kind of go into some of this here. This I'm scrunching back, and I had a lot of people that were, you know, that look at my work and they were, you know, saying, no, I don't think so. I don't think your work's good. I don't think the 13s work. Blah blah blah. Well, hold on. Here we go.
yeah. You can't
So
please all the people all
no,
the
I
time,
listen,
Tom. You know
and
that, right?
I'm a fairly humble person in the sense that I know when I'm right and wrong and I live in I will jump on my sword when wrong. Um which I'm you know, I've jumped on my sword a lot lately. So this is Bitcoin here. This is the daily. Had a 13 up here. You know, at this point it was going to the moon. But you had pullbacks here. You had a five wave move down, and then you had all these 13s down here. And this was I can zoom it, but you can tell. I
Yeah,
was saying 13 here, you're probably going to be able to buy it here. And you had these
yeah.
buy signals here, and then
That's
you had sell signals, and it was real nasty and choppy.
that was a cup.
One cool thing is I actually some of these annotations are older, but I had 13s up here, and it went sideways. And in August, I'd been telling people that with DeMark, Tom DeMark has created, I think, probably 100 different indicators, and one of them is a wave like Elliott wave type of indicator, and he has these mechanical drawn wave targets. So got pretty close on the downside wave three at 54.96 and bounced, and then 50,000 was the target, and it hit it exactly on the carry trade unwind. And one thing to think about, and I've thought about this and written about it, that carry trade unwind wasn't just currencies or bonds or it was really equities and
Everything.
the froth in the market because you had crypto getting killed. You had, you know, Nvidia went down 30%, Apple went down huge. You had all these different things. That is the risk I see if things start to unwind quickly, that
Okay,
you
so
have
we
such
have the
high positioning.
BOJ. We have the BOJ Friday, and the yen has already come off quite a bit in the last week. Could we
Hmm.
have a carry trade unwind 2.0 like we had last summer? If
Yeah.
you know, the yen is a lower high than we were last year. Could be a
Yeah,
failing
it's,
rally.
you know, anything is possible. And I think that the one thing about central banks these days is they try to telegraph what they're going to do well in advance. This was
Okay,
this
you
is
have that
the
as wave two.
USD
Yeah,
JPY. So
yeah,
this I haven't really get over here. You haven't really seen the 13 exhaustions
yeah.
here, and when it's going down, that means the yen's strengthening and the
Strengthening.
dollar is going down. But you really did have some pretty good signals here that we were trying to bottom here, and it reversed. I thought we could go a little lower with the USD, JPY, and yen would continue to strengthen, but lo and behold, it stopped. But it you had upside wave five here. I mean, it's possible. I would say that big round numbers are going to be the tell, and 150 is probably the level. It's pretty far from here, but if that
Yeah,
broke,
$52.
yeah, I mean, I think so, and it's a possibility. So one thing I wanted to show you guys, and oops, hold on. Let me move this guy here,
Your
move this guy
sentiment chart,
here.
DSI chart. Okay.
You can see all the fun stuff I look at too. I always
Yeah.
like to look at what people have on their screens. I have Formula One, Autosport, ESPN, Investors Intelligence, YouTube. I'm watching YouTube a lot. One thing is you see I have this purple line down my monitor, so this is part of the monitor that broke. But this is our site, and you look at daily sentiment index data, and I really want I'm gonna make sure that I have you able to access this. But the daily sentiment index data is the sentiment that we use. Jake Bernstein created it in 1987. He polled
Yeah.
people and said, "Are you bullish or bearish?" And not where you get this, neutral like some of the other
Yeah.
uh, sentiment indicators. I think that's sort of a mild excuse to say, are you in or you out? But it's interesting, and I'll start with the 30-year bond. And I think that it's interesting to see what's happening here. And I'll
Nothing but
try and
nothing but bears and a lot of big short positions from the COT.
yeah, and one my favorite moving average is the 20-day moving average. And if you have a 20-day moving average moving up or down, you probably have a pretty good idea of which way things are going. So this is the yield on the 30-year, and this is the daily sentiment. Sorry, those little boxes here. The sentiment, and we were grinding down here at 10% bulls. The 20-day moving average of moving the was around 13%. So
Yeah,
we
that's
had
low.
um, we had a very oversold market down here,
Right.
and so it was just sort of primed for the bond market to move again. And I'm not sure if it's necessarily going to get continue going higher. I like to look at the 50% level, sort of like RSI, in the
Well,
sense that
that
if
was
you have,
Gann. Gann always said halfway back.
yeah, if you have less than 50%, you have more bull or bears, and you have more than you have more bulls. And sentiment can stay oversold and overbought, and I can look back and go back and in
Yeah.
certain times, and I can adjust it to different periods. And you can see that you have these big rounding turns, and those are, that's a bond market rally right there. This is a bond market crash here. And it held, basically the 50% level here, and continued higher with the rates going lower. So I look at that. If you look at the S&P, which I will say I have a lot of my subscribers look at this every single day, and if it's not up to, it comes out at like around 6:30 or 7 every night, and if it's not completely up to date, if it because the download isn't done, they
They go
text me on my
crazy.
phone.
Oh,
So here's the S&P, and one of the things that's been rather unique about 2024 is we really haven't been that oversold on sentiment. So we only got down to about 30. Here, let me see where it is. We were at 35% bulls. That's not that oversold. I can go back in time and look at
yeah.
this is
20s.
2000 or 2022. We stayed down here in this bearish place all year, and we had these swings. Like this is October 27th, 2023. It was at 10%
Yeah.
uh, bulls, and that was
Yep.
the low.
That
And
was it.
so
Yeah.
I've been a bit
Good
stubborn
stuff.
that we haven't been able to get really oversold. We got to 20. That's moderately oversold. This I think was August
Yeah.
8/5, 26. And what's remarkable is we've had these really strong rebounds, and we've been doing this, you and I have been doing this long enough that we know that when you have really true bottoms, people aren't as aggressive wanting to buy. But
No.
that's the market that we're living in today. People
Yeah.
are very, very aggressive and wanting to buy. I mean, look at the NASDAQ as well. So you haven't really seen anything that's been, dire in
Yeah.
anything.
Not
The
a
one
not,
thing that I'm watching right
no
now,
GMO stuff happening.
no, I just we really just haven't been able to get oversold enough, and so I think that's sort of the importance of what's going on, and just to kind of reiterate that, and this if you're watching yen. This is the yen sentiment. So it is starting to turn, as you can kind
Yeah.
of see without the box. So it's possible if we start to move above 50%, we're at 40% right now, that some things can unwind. It's very similar to what
Yeah.
happened back here in the
I'm
summer.
looking for the same kind of move.
Yeah. I mean, we'll see. And
Yeah, we will.
one thing about the yen is that they've allowed their yen to
Depreciate.
depreciate so much. And then when it strengthens, it becomes like a full-on market crisis.
Well,
But
it's
you
a
can
carry.
see,
It's a, people are using that to finance their purchases. So
yeah,
if both rates go up in Japan and the yen gets more expensive, it takes the edge off the carry trade.
yeah, exactly. But one thing that I like to explain to people is just because it's oversold doesn't mean that it's done. It really needs a trigger. And so for using it, just from the simplicity of it, and for people that come on the site, they can see the market sentiment, and when you have a 20-day moving average starting to lift with sentiment and it's below it on price, you probably have some risk there that I think that could start to creep in. And I'm just trying to look at one. People are looking at gold. I'm sort of moderately positive on gold. Gold was interesting because this is another good example. Gold had been in a positive place all year. It didn't get oversold once. And then all of a sudden, I said if it broke 60%, which that's around here, and you
Yeah.
could see it in that level there. It then was, at risk. And I actually I bought gold and had a trade long, and bailed out of it. But it's now, getting a little bit overdone. But I think gold could can keep going higher. I've been more positive on commodities in the last 6 weeks than I than
The
I have
grains,
been for a while.
are you building a silo on your property to put wheat in there? Because it looks like
Uh,
the grains have turned. And that's going to be a very difficult promise for our new president to keep lower food prices if we're
yeah,
in
wait,
an
wait, one sec. Let me
embryonic.
just shut this door here. Oh, somebody's
Okay.
a little loud
Anyway,
in the other
I
room.
like the grains, Tommy. And let me have one word answers. Bull or bearish, bullish or bearish the dollar.
I'm bullish the dollar,
Okay.
and until things change.
Okay.
Yes,
And oil.
I'm I'm bullish. I have been, but I think that you're gonna get a bit of a pullback. I don't think that the drill baby drill is all that effective since we're drilling like crazy already.
Okay.
And seasonality gets a little better for crude and energy stocks. Last year I did do something that was good. I overweighted my portfolio in energy stocks and ETFs in the first quarter. And I can tell you that I didn't have anybody that liked that trade. And the funny thing is the energy ETF was the strongest ETF of all the US sectors in Q1, and we sold it. Um,
And
So hold on,
that
let me
was with
find.
WTI going down. It's like they separated. That's why I think it had people wrong-footed. You really
Yeah.
didn't have strength in the commodity, but the shares kept going.
Well, the two big commodities that you have to watch is well, it's gold and it's crude.
Oil.
It's because that they are just so overweight in the most of the commodity indices. So one thing that's been kind of weird, and sometimes I see things and I say it's weird. Um, Crude has been crappy all year, but
Yep.
sentiment has stayed relatively elevated all
Yep.
year, and I think that was more Middle East concerns.
Yeah.
That
So
that that
it's
was it.
vulnerable then.
Yeah, but
Yeah.
it certainly could, if it goes to 50, it seems to have bounced off that 50% level with sentiment fairly well. And it could go to I think if crude goes to the 20-day moving average again, that might not be such a bad thing as well. And the
Right.
DeMark indicators are sort of lining up with that as well. Um, what
Well, your
else?
work is great, Tom.
Well, thanks.
Really,
I appreciate that.
I'm really glad that I had an opportunity to see it personally and share it with people that follow the interviews here on TradeGate Hub. And I know that you have a New Year's deal for people to keep in touch with your work and your DSI work and all the trading that you do. I would think it would be very important for people to know what Tom Thornton is thinking going forward in 2025 when you just can't stay long something forever and think it's going to be okay.
Yeah,
So,
I agree
yeah,
100%.
yeah,
I think that we're going to be in a much more tactical type market.
yeah,
I think that once the euphoria and reality hits with Trump and his new policies, I think then we're going to be, into a more, you know, more dispersion in the markets,
yeah.
I welcome that. That is like, making all-time highs with because of Nvidia going up, and that's like the worst case scenario
Do,
for me. It
I
doesn't
might be
work.
wrong, but I sold this retracement in NVIDIA today. I bought May puts. So we'll
Huh?
see.
Okay.
About a 78% retrace today.
Well, listen,
And
it's the market. I mean, that is
yeah,
one that is basically the market, and um, I think that there's going to come a time, and it sort of happened in the dot-com bubble, which I don't think it was necessarily a dot-com bubble. I think it was a Y2K bubble.
oh
That
yeah,
the crazy spending just sort of
yeah,
stopped.
right.
If all of a sudden we hear about one of the big mega companies that they say we're good right now. We're gonna lower our capex.
Yeah,
We're gonna pull back on on the spending that we've allocated, or we have enough chips and our hyperscalers are data centers are getting full. I think I
yeah,
think that's going to be something to watch in
yeah,
2025. That won't be good for Nvidia, by the way.
yeah, right.
I do like natural gas a lot. I think that that's going to be one of the better trades.
Yeah,
I have an infrastructure play called Golar that's pretty good.
okay,
I think that is a stock that can double up this year. Um, I'll take up 30%. That'll be fine.
all right.
But it's as far as people reaching out to me, I've locked my account on Twitter. So
Yeah, I
if
see
you
that.
hit,
I don't blame
you
you.
know,
I said,
invite,
wow,
I will accept you.
what a great idea.
Well, I tend to get these people that are, offering 500% returns
Yeah,
in the Indian market
yeah,
overnight, that have sort of infiltrated, and I get
yeah, there,
impersonators, and
yeah,
I've tried to just do less on Twitter or X,
yeah,
and not that I really, have any thing about it, but I've just been too busy. So if you hit me up on it, I'll accept you if it comes through today. And if you want to reach out to check out our stuff, hedgefundtelemetry.com. We are running a special. I think it's pretty good. You use the code 2025 on an annual rate, and it's a really good deal. And I'm not going to say how much off you're getting, but it's really good, and it's not going to last long. So I've been I feel like you're getting a lot, especially if you just use it for the market sentiment, which I think you and I are in agreement. It's good stuff.
Yeah, it is good stuff. And Tommy, like it or not, you're now a new trading warrior brother of mine. You
Ah,
got through an interview with me. That's what I call people in the business that are warriors out there, because you have to be. And you're definitely one. And thank you so much for taking time out of your day. And Maggie was right about you. You're excellent. And people, check Tommy out, not just on X. Check out his offer. And you're talking about a few, few pips, whatever.
yeah,
Make 2025 a year that you keep an open mind. It'll keep your account open, and that includes intelligence gathering with people that do great work. And I count Tommy as one.
thank
So
you.
you're very welcome, Tommy. Pleasure meeting you. I appreciate it. Thanks for granting the interview.
I'm always here.
All right, Tommy.
Anytime.
All right, we'll see each other again. I have a feeling about that.
Yep,
So thanks again. I hope 2025 is a flow of people thriving in a difficult environment. And I've been saying, let's have a good decade this year.
sounds good.
Tommy Thornton, everybody. Thank you, buddy. So that's a wrap, everyone. It is recorded. You'll be able to see it on the site, and I'll tweet it out there on X so you can take a look at it. There's a lot of great information in what we covered today. So, and remember this, don't just count your pips, count your blessings. I'll see everyone tomorrow. Thanks, Tommy.